Good morning. This is Japanese Economic Review Channel. Yesterday, April 2nd, the global financial landscape experienced what we are calling a geopolitical whiplash. We witnessed a rare and stark divergence between the US and Japanese markets. While one thrived on temporary optimism, the other buckled under the weight of delayed reality. Today, we analyze the mechanics behind that 24-hour split. Yesterday's story was a tale of two markets. While US markets logged a 3-day winning streak on April 1st, Japan faced a brutal reversal yesterday, plunging over 1,200 points. The Nikkei 225 fell by 1,276.41 points as geopolitical uncertainty was renewed and oil futures spiked during the session. Rhetoric was the primary driver of yesterday's volatility. Following informal morning remarks in the US regarding a swift withdrawal from Iran, President Trump's formal address at 10 a.m. JST yesterday lacked a concrete resolution plan. Early termination hopes evaporated instantly, triggering immediate institutional selling pressure in the Tokyo market. To understand yesterday's crash in Tokyo, we must look at the preceding US session on April 1st. The Dow rose 224 points, bolstered by a strong March ADP employment report showing 62,000 jobs added, well above the 40,000 estimate. This risk-on sentiment initially propelled tech leaders like Western Digital and Intel, before the mood soured in Asia. Yesterday, the Japanese market opened higher, but reversed entirely after the 10 a.m. address. The Nikkei hit a low of 52,273 at 3 p.m., a staggering drop of 1,466 points from its peak. With 1,224 decliners on the prime market, the breadth of the sell-off signaled a total withdrawal of investor confidence. The hemispheric divergence matrix summarizes yesterday's split. The U.S. market's broad rally on April 1st was met by a massive risk-off environment in Japan yesterday. While U.S. capital flowed into tech, Japanese investors fled into defensive domestic transport sectors to mitigate the impact of spiking after-hours oil futures. Sector-wise, yesterday was brutal. 30 out of 33 industries declined. Energy, resources, and tech took the hardest hits. However, safe harbors emerged in marine and land transport, such as NYK and Junior West, as well as Mitsubishi Logistics. These were the only sectors providing a shield against the broader collapse. We can now unpack the geopolitical risk premium observed yesterday. The stalled peace plan at 10 a.m. triggered a sudden spike in crude oil futures. This led to a resource squeeze and an immediate sell-off in macro-sensitive sectors like construction and tech, forcing a defensive rotation into low-beta domestic havens. In a fascinating anomaly yesterday, space ventures defied market gravity. While the Growth 250 index turned negative, iSpace and Astroscale holdings soared. Driven by NASA's lunar successes and SpaceX's IPO filing in the US, these catalysts allowed these specific stocks to decouple from the surrounding geopolitical panic.
Currency markets yesterday also reflected incremental dollar strength, with the USD JPY reaching 159.58. This dollar resilience amidst the geopolitical news cycle provides a vital backdrop for Japanese corporations, which continue to push forward with strategic initiatives despite the massive volatility seen in equity markets. Despite yesterday's chaos, long-term innovation remained on track. Resona HD signed an AI partnership with Fujitsu. Sompo HD entered a joint venture for digital transformation, and FRONTEO secured patents for a conversational AI designed for depression diagnosis. These moves prove that digital integration remains a corporate priority. Yesterday also brought news of long-term strategic expansion. Daido Trust consolidated its biomass power businesses into Daido Bioenergy, and Tapan established a new US-based company for personalized cancer medicine. These initiatives highlight a continued shift towards sustainable energy and high-value global healthcare. In the retail sector, yesterday marked several new beginnings. Morinaga announced a Dole collaboration, Kameda Seika is revamping a core product, and Meiji is launching new yogurt sizes. Meanwhile, companies like Alpen and Odakyu are focusing on regional value creation and lifestyle innovation. Looking forward from yesterday's volatility, 3 barometers matter: tech's hyper-reactivity to Middle East rhetoric, crude oil as a real-time pricing mechanism, and the domestic defensive premium. If geopolitical stagnation continues, we expect capital to remain hidden in structurally isolated sectors like land and marine transport. We conclude with a final look at yesterday's numbers. The Nikkei 225 closed down 1,276 points at 52,463, while the US Dow ended its session on April 1st up 224 points. Yesterday's divergence is a stark reminder. In an interconnected world, The timing and clarity of information are just as vital as the data itself. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.